Are you unknowingly putting your business at risk by claiming personal expenses on your tax return? Did you know that one of the most common CRA audit triggers is the misclassification of personal expenses as business deductions? Hi, I'm Toyin, a chartered professional accountant, money coach, and financial planner with an MBA. I've spent thousands of hours helping people with their money and business, and a common mistake I repeatedly see is the misclassification of personal expenses as business expense. Today, I want to help you avoid this costly error and give you clear guidelines on what counts as a legitimate business expense according to the Canada Revenue Agency. By the end of this video, you have a clear understanding of the line between personal and business expenses, especially when it comes to home-related expenses that trip up so many Canadian entrepreneurs. Let me start with an example of a client. Let's call her Sarah. Sarah was audited by the CRA because she claimed her entire property tax bill as a business expense. Sarah worked from home and genuinely believed that this was a legitimate business deduction since her home was a place of business. Unfortunately, this triggered an audit, which ended up costing her thousands of dollars in back taxes, penalties, and accounting fees. The truth is that the CRA has very specific rules on what qualifies as a business expense. Getting this wrong doesn't just risk an audit. You could also be leaving money on the table by not claiming all the legitimate deductions to which you're entitled as a Canadian entrepreneur. Here's the golden rule according to the CRA. For an expense to be deductible as a business expense, it must be both reasonable in the circumstances and incurred for the sole purpose of earning income from the business. The CRA evaluates whether expenses are reasonable based on whether they are common practice in your industry, necessary for generating business income, or proportionate to the benefit received. But many Canadian entrepreneurs struggle with how to apply this rule, especially when an expense seems to straddle both the personal and business categories. Let's break down some of the most common areas of confusion. Home-related expenses. First, let's address the example I mentioned earlier. Property taxes when you work from home. Here's what the CRA actually says. If you qualify for the workspace in the home deduction, you can deduct a portion of your property tax, but not the entire amount. That portion is based on the percentage of your home used for business purposes. For example, if your home office takes up 10% of your home's square footage, you can deduct 10% of your property taxes as a business expense. The remaining 90% stays a personal expense. The same principle applies to mortgage interest, but not the principal portion of the payments. Rent, utilities, home insurance, home repairs, and maintenance. The CRA has two important criteria for claiming these expenses. 1. The workspace is your principal place of business, meaning that more than 50% of your work is done there. Or 2, the workspace is used exclusively for business income, and it is used regularly and consistently to meet with your clients, patients, and customers. Unlike personal tax returns, there is no simplified method for workspace in the home deductions for businesses in Canada. You must calculate the actual percentage of your home used and apply that percentage to the eligible expenses. Vehicle expenses. Another major area of confusion is vehicle expenses. Many clients assume that their car payment is a business expense because they use the car for business meetings and deliveries. Again, it comes down to the percentage of use. If you use your car for business purposes 70% of the time, then you can claim 70% of eligible expenses, and the remaining 30% would be personal expense. You have two methods to choose from under the Canadian tax rules. One is a simplified method. Track your business kilometers and multiply by the CRA's prescribed rate. It is currently around 59 to 68 cents, depending on the province or territory, and the first 5,000 kilometers versus additional kilometers. This method is simpler but might result in a lower deduction. Method 2 is the actual expenses method. You track all costs: gas, lease payments, maintenance and repairs, insurance, depreciation, and multiply by your business use percentage based on kilometers driven. What's not allowed according to the CRA? Claiming 100% of your vehicle expenses when you also use the vehicle personally. And traveling from home to your regular place of work is considered a personal and not business use. You also need to be aware of the CRA's limits on vehicle costs, including maximum allowable capital costs for passenger vehicles and limits on monthly lease payments. 3. Meals and entertainment. This is where I see a lot of clients get creative with their expense categorization. Let's be clear about the CRA's position. Meals with clients where you discuss business are generally deductible, usually to an average of 50% across Canada. Your daily lunch is personal, even if you eat it at your desk while working. Coffee with friends is personal, even if you briefly discuss business. Entertainment expenses like concert tickets, hockey games are only 50% deductible, even when you take clients. For a meal or entertainment expense to be deductible in Canada, it must be directly related to generating income for your business. For meals, business must be discussed during the meals. The expense must be reasonable in the circumstances. You must keep proper records, receipts, plus records of who attended and the business purpose. For entertainment, the names of your clients or customers must be recorded. Remember that the CRA has specific rules around meals and entertainment with a limitation of 50% in most cases. This means that even legitimate business meals and entertainment expenses are only 50% deductible. 4. Technology and subscriptions. What about that new laptop, smartphone, or software under the Canadian tax rules? The CRA treats technology purchase differently depending on their nature. Capital assets like computers and smartphones must be depreciated using the capital cost allowance system rather than expensing them all at once. Software subscriptions and digital services can usually be expensed in the year they're paid. If you use these items exclusively for business purposes, then they are 100% deductible, either using the CCA or expensing it at once. If you use them for both business and personal purposes, then you must allocate based on usage. For example, a dedicated business cell phone is 100% deductible through the CCA. Your only cell phone, which you use for both personal and business purposes, is deductible based on the percentage of use. Netflix subscription is probably personal, except you run a bar or restaurant and it is used for the entertainment of your customers, or you work in the film industry and you can justify it as research. Industry-specific software or publications are fully deductible as a current expense. Here's a simple system you can use to determine whether an expense is business or personal. Ask yourself these 3 simple questions. 1. Would I have incurred this expense if I didn't have this business? If the answer is yes, then the expense is probably personal. If the answer is no, then continue to question 2. 2. Is this business expense reasonable in my industry, and does it directly help my business generate income? If the answer is no to both questions, it is most likely personal. If the answer is yes to both questions, continue to question 3. 3. What percentage of this expense is for business purposes? This is the percentage that you can deduct as a business expense. Let's apply this to a few examples. Groceries. You're going to buy food regardless of whether you have a business. So it fails question 1. It's a personal expense. Internet services. Internet service when you work from home. You would likely have internet service at home anyway, but it is necessary for you to carry out your business. So in this situation, you're going to allocate it based on percentage of use. Professional development costs specific to your industry. This is an expense you would most likely not incur if you weren't running this business. So this is 100% deductible. Property tax. You would pay this regardless. So it fails question 1. But if you have a qualifying home office, then you can allocate this and claim it partially as a business expense. Here are some practical tips to implement this system. Keep separate bank accounts and credit cards for business and personal expenses. Regularly review your transactions and categorize them according to the CRA guidelines. For mixed-use expenses, document your business use percentage. Save documentation that shows the business purpose, not just the receipts. Consider using accounting softwares that allow you to attach notes to transactions. Track GST, HST separately for input tax credits if you're registered. Retain records for at least 6 years as required by the CRA. When in doubt, consult with a tax professional before claiming a deduction. Remember, the goal is not to claim every expense as business related. The goal is to accurately reflect your true business expenses in line with the income tax law. This not only keeps you compliant with the CRA, it also gives you a clear picture of your business finances. If you want to better understand how proper expense classification affects your business profitability, check out my video, Income Statement Explained, What Every Business Owner Should Know, where I break down how to read and use this crucial financial statement. See you in the next video.